And I'm joined live in the studio by fund manager Roger Montgomery. Roger, welcome.
Thank you, Tiggy.
Well, last week we were talking with a Fairfax. What do you make of the restructure?
Look, I think it's sadly for the business and for its staff perhaps too little too late. Really what needed to happen is some real structural reform many years ago in 2004 and 2005. Now, unfortunately, they're chasing a losing proposition.
Even though the markets obviously like the news and bump the share price up considerably.
Oh, look, markets go up and down on a daily basis all the time. The reality is we haven't owned these shares. This is a business whose profits, normalised profits, haven't increased from 2004 to today, despite spending $3.6 billion on acquisitions and on reinvestment in themselves.
As you'd expect, there have been a lot of commentary on the move. But
yes.
One of the things that I thought was quite interesting, Andrew Jaspin, the former editor-in-chief of The Age, articulated quite well, I thought, and that was that the whole digital strategy was flawed in that that Fairfax Digital and Fairfax Publishing were kept separate at a time when many of the other major mastheads around the world were actually pooling those resources.
Yes, well, that's certainly right. The Wall Street Journal, the New York Times, the USA Today, all those newspapers had merged their digital with their print media businesses, but Kirk at the time decided that both of these businesses were separately profitable and wanted to keep it that way, not recognising that there was structural decline in the print media business.
Can you cut costs and start charging more? Because the paywall is now the way they're going to go. And obviously they did that with the Financial Review last year, and then they had to come back a bit from that and have some of the content free. I mean, it's obviously quite a sensitive issue, isn't it?
But the problem is you need people to come back. If your model is based on advertising revenue, then you need people to come and visit. You need eyeballs visiting. And there are less and less people reading the newspapers. They don't have to go there to buy a car anymore. They don't have to go there to buy a holiday. They don't have to go there to buy a house anymore. That's been taken over by car sales and What If and realestate.com.
But this is the classified side of the argument, not the
exactly
subscriber
right.
side
but
of the argument.
That's a very big reason people bought the newspaper, to read the classifieds, to buy a car, to go on a holiday, to buy a house, all those sorts of things. And they're not visiting for that reason. So there's fewer eyeballs, so you can't command the revenues that you once were able to do. I suspect we've got a smaller business now, and that's what we're going to have, a much smaller business, and we'll have a realestate.com or a carsales.com launch a takeover for Fairfax.
Well, that'd be quite a radical idea, and then the beast would be reassembled.
Well, then you build a toll bridge again.
Yeah.
Exactly.
Yeah.
We don't own the business, but I suspect that would make a lot of sense. If you can build a digital newspaper and you can bring in those classifieds again, then you build eyeballs and you can increase your advertising dollar.
What do you think that Gina Rinehart, now sitting on almost 19%, makes of this announcement?
Look, I think she's cheering. If she wants editorial influence, then nationalising a newspaper is a great move for her, because it means the decision to actually change influence opinion in Melbourne and Sydney is made much easier when you've got one newspaper.
One voice. One
voice, exactly.
And what do you make of her, ongoing criticism of the board, which was mentioned by Neil in that piece, which is, I guess it was the Gordon Gekko argument in his great greed is good speech, wasn't it, about the board having to have skin in the game. Does that warrant any merit?
I think it makes absolute sense. The idea of independent boards, independent directors on a board being interested in shareholders when the majority of their income is from being an independent board member, they're going to protect their interests often more than shareholders. And so I agree with Simon that you definitely need to have skin in the game. It makes a lot of sense. I'm very, very sad for the journalists who are now going to lose their jobs.
Well, it's interesting. There's Matthew Moore saying, well, one of the journalists saying that 1 in 4, 1 in 5 journalists may be going at The Age and The Herald. And I guess there are only so many supernumerary subbies that can go. To what extent should content be driving those newspapers, and is it under threat?
Look, I think one of the issues that you've got, if I was thinking in terms of business strategy and I was carsales.com or realestate.com and I wanted content and a reason for people to keep visiting my site, I'd be employing those experienced journalists to write about my sector.
Yeah, well, we'll see what happens. Roger Montgomery, thank you very much for joining us.
It's a pleasure.